Okay, so now let's begin. Let's begin with the consolidation. Now, in the previous class, we did few more problems on calculating cost of control. For cost of control, we compare purchase consideration and share of holding company at the time of acquisition. If you are paid more, then goodwill. If you are paid less, then it is capital reserve. Then few unique problems we have seen in yesterday's class, and today's class, let's directly begin with the consolidation. So this is the actual consolidation problem which we are starting, and we are doing the easiest problem in consolidation. Prepare consolidated balance sheet of H Limited and its subsidiary as at 31st March 20x1 from the following information. H Limited, S Limited, PPE they have given for both the companies. Investment 2000 equity share of S Limited 2,20,000. What is this? Cost of investment. Cost of investment. Current assets, share capital, P&L, trade payables. H Limited acquired the shares of S Limited on 31st March 20x1. That is end of the year. Now, everyone, please pay attention. The first step in consolidation is knowing the share of holding company. How much share is holding company having? 20,000. And how many shares are there in S Limited? 2.5 lakh divided by 10, 25,000, which is 80%. Everyone, this will be the first step. Everyone. Consolidation is nothing but simple one-to-one addition subject to adjustments. Listen to me carefully, everyone. Consolidation is nothing but simple one-to-one addition subject to adjustment. Everyone. Now, what are those adjustments if we learn consolidation over? What are those adjustments that we have to learn? So that I will explain as we do the problems. So last problem we did was 9. So now illustration 10. Illustration 10. So now what did I say for consolidation? It is simple one-to-one addition. Now generally when we prepare, what is the title we write? Balance sheet. Now here we will write consolidated balance sheet of consolidation is prepared in the books of holding company or subsidiary. Holding company is also known as parent company. So consolidation balance sheet of H Limited as at 31st March 20x1. Now what are the three columns? Particulars, note number and amount. So particulars, we start from equity and liabilities. Under that, shareholders fund. This will be note number. Share capital. Note number. Everyone, share capital. Note number 1. Amount. This is the first step. Always in the share capital, you write holding company. Why buy a holding company? Because this 3 lakh, two components, holding and minority interest. Sorry. This 250. This belongs to two people. Holding and so this minority interest will go to minority interest separately. Where will minority interest come? I'll tell in 2 minutes. But holding company share, don't you think will get knocked off with investments? Investment by holding company is share capital of subsidiary. Investment of holding company is share capital of subsidiary company. Everyone. So go to your summary notes. Go to your summary notes. Point number one. Point number four. Point number four. Procedure for consolidation. Point number four. Procedure for consolidation. In that point number one. Consolidation is simple. Consolidation is simple addition of balance sheet. Simple addition of balance sheet of holding company and subsidiary company. Holding company and subsidiary company. Holding company and subsidiary company. Subject to few adjustments. Subject to few adjustments. Subject to few adjustments. Point number two. Share capital will be only for holding company. Only for holding company. Full stop. Subsidiary company share capital. Subsidiary company share capital will be adjusted in cost of control and minority share will be shown separately. And minority share will be shown separately. Minority share will be shown separately. So be there in your summary notes. Let me complete the problem. Share capital I'll write for holding company only. Holding company share capital 5 lakhs. Note number one. So notes. Notes to accounts. Point number one. Share capital. Share capital. How much? 50,000. 50,000 shares of 10 each. No authorized, no issued, nothing is given. So it is 5 lakhs. Here also I need to update 5 lakhs. Everyone. Next, reserves and surplus. Now, bhaiya, this so we cannot do without calculating cost of control. Because in cost of control, either goodwill or capital reserve. If capital reserve, it will come here. So notes to accounts is separate, working note is separate. Notes to accounts is separate, working note is separate. So now I am doing working note 1. Cost of control. What and all do we compare? Cost of investment. Cost of investment, how much? 2,20,000. Too much, 2,20,000. Then we compare that with holding company share at the date of acquisition. Share capital. What was holding company share capital? In that, what was holding company share? Then reserves and P&L, will it come? Will it come? Right. We have acquired last day of the year. Entire profit is pre-acquisition. Entire profit is pre-acquisition. So pre-acquisition profit, as per AS 13, it should be reduced from cost of investment. So pre-acquisition profit, it is 1 lakh. So totally 2,80,000. 2,80,000. It means capital reserve of 60,000. Capital reserve of 60,000. So note number two. Reserves and surplus. Capital reserve 60,000. Capital reserve 60,000. Everyone, shall I continue? P&L. Only holding company. How much? 2 lakhs. Now go to your notes. Go to your notes, everyone. Summary note. Summary note. Point number 2 or 3. 3. Under fifth, point number 3. Under fifth, point number 3. Okay. Under point number 4, point number 3. 4.3. Yeah. So for reserves and surplus, for reserves and surplus, we will consider for reserves and surplus, we will consider holding companies reserve, holding companies reserve, and holding company share of post acquisition reserve, holding company share of post acquisition reserve of subsidiary. So whatever is subsidiary post acquisition reserve, in that holding company share we will add. In this problem we did not add. Everything was pre-acquisition. Everything was pre-acquisition. So this is 2,60,000 everyone. So here we have come share capital P&L is the next. No. Next will be minority interest. But here this was not there in the format which you gave, because consolidation format I did not give you. Nothing, no new change, only one line item will be added, minority interest. So point number 3, minority interest. And this you are doing this from first illustration. 9 illustration you guys have already done on minority interest. So share capital 2,50,000 into 20%. 50,000. For minority interest, you need not segregate pre and post. Both will come. So P&L 1 lakh into 20%. Anything else? 70,000. Note number 3. So in your summary note, in 4.4 for minority interest, we will consider their share of share capital and reserves and surplus. Share capital and reserves and surplus. Now tell me, this 70,000 is minority interest at the time of acquisition or at the time of consolidation? In this problem, both are same. The day you are acquiring, that day only you are preparing consolidation. In this problem, both are same after minority interest. Current liabilities. Note number 4. So add both. That's all. That I gave in the first point. Minority is, consolidated balance sheet is addition of holding company and subsidiary company. So fourth, trade payables, there, H limited. So H limited 175 and 50,000 both put together 225. Everyone, any difficulty till now? Liability side, everyone. But yeah, minority interest we were doing standalone. In this problem we are doing in balance sheet. Share capital we wrote only holding. Minority share we have put here and balance we have put in cost of control. Everyone, is it clear? So liabilities over next. Assets. So assets. Non-current assets. Non-current assets. Property, plant and equipment. Note number 5. So add both. 8 lakhs. That's all. Note number 5. PPE. 5 lakh and 3 lakh. 8 lakhs. Everyone. After PPE. Investments will come. See, investments we have adjusted here itself. In cost of control, holding share of share capital, investments have been considered. Finally, current assets. Current assets. Note number 6. Add both. Okay, we are consolidation over. Yes, over. That's all. That's all about consolidation. Everyone, now give me 1 minute. Give me 1 minute, and then you can start writing. So current asset H limited, S limited, 155 and 1 lakh. 255. Consolidation over. Consolidation over. Everyone. So what did we do, bhaiya? Bhaiya, what mokke balance sheet, bhaiya? 3 items we have just added. See, trade payables. Simple one-to-one addition. PP. Bhaiya, assets hai to. Damn easy, bhaiya. Always consolidation, you start from asset side, you see the confidence you are getting in exam. Maximum challenge can be 1 or 2. Maximum adjustment, I am telling 1 or 2. One is intercompany owing. Holding company data, subsidiary company creditors. Or other way, holding company creditors, subsidiary data. So that you will subtract intercompany owing. That is the maximum adjustment. Second is stock, unrealized profit. Maximum these 2 adjustment in the asset side. Only 2. The entire game of consolidation is in reserves and surplus. भैया ये reserves and surplus क्यों है भैया? Amalgamation, nature of merger, nature of purchase अभी भी समझ में नहीं आया. Thank you. So the nature of merger, we prepared entire balance sheet was same. Small minute difference in reserves and surplus. In consolidation, if you are getting wrong answer, it is because of reserves and surplus. No other adjustment will irritate you. This reserves and surplus. भैया क्या भैया इतना easy तो था, capital reserve and this. So भैया these 3 items तो भैया मौके भैया. Minority interest. Sorry, and this is also easy. Only holding company we have to take. Everyone. Now, minority interest, we have 9 illustration we have done. And when I did the previous problem, we segregated pre and post. Minority interest not required. From here on, not required. Even if you split and give, it's okay. Even if you don't split, it's okay. But Bhaiya, will you split and give? Yes, I'll split and give. So in this, why you did not know post acquisition profit? No post acquisition. So it is same. Minority interest. Reserves and surplus. One capital reserve we got from cost of control, and then holding company reserve. That's all. This also we did in one problem. I think the first problem. First or second problem. Check. Not there. So with holding company, we add subsidiaries reserve. First problem. With holding companies reserve, we add subsidiary reserve only to the extent of holding company share. Is everyone clear with this consolidation? Everyone, see, this is like a stepping stone. This is the very fundamental basic problem. Or every problem you will see some extra item, extra adjustment will be added. Until mock, it will be added. Fortnight little tough. Next fortnight even more tougher. Mock 1 thoda tough. Mock 2, mock 3. So main exam will not be beyond our mock. Guaranteed, be rest assured. This time the papers I made three set of mock papers. This time I am telling you, you prepare and write genuinely. I challenge for none of the paper it will be tougher than exam. Sorry, means none of the examination paper will be tougher than mock three. Open challenge, open challenge. इतना tough बनाया है. तो बोला experience the worst year. Beyond this, it cannot go in your exam. Come on, start writing, start writing. The worst has come. बस amalgamation consolidation इससे worst कुछ नहीं है. Come on, write quickly. At least three problems you'll do in this session. Yes, everyone, can I continue? So now moving forward, illustration number 11. H Limited and S Limited provided the following information as at 31st March 20x2. Similar balance sheet what we had in the previous problem, it's not same. H Limited acquired on 1st July. So in the previous problem, they acquired at the end of the year. Now they acquired on 1st July. Now balance of P&L account of S Limited on 1st April was 30,000. So here we have to split pre-acquisition profit, post-acquisition profit. Except that the entire problem is same. But we don't have choice but to do it fully again. And I think you forgot the terms which we discussed in amalgamation. I am reminding you again, next time if I see anyone opening their mouth for any reason, next second you will be out of the class. If putting it very simple, when I'm giving you time to copy, it's just to copy. I don't want anything else at that point. So consolidated balance sheet of H Limited as of 31st March, if this all this will be same. Now share capital, in share capital what we'll write? Only holding company, which is 1,50,000. 1,50,000. And how many shares do they have? 15,000 shares of 10 each. So which is 1.5 lakh. Now before we start reserves and surplus, we have to do this working. Cost of investment. Then holding company share at the date of acquisition. 1 lakh into, here also 80%, because 8,000 and they are having 1 lakh. Divide by 10, 10,000 shares. So 8,000 by 10,000, which is 80%. So 1 lakh into 80%, 80,000, 80,000. Now, where profit split up, now it is mandatory. Now it is mandatory. So everyone, you are comfortable with that chart which I made? We will use the same chart then. So PNL. PNL, if you see the balance in PNL is 40,000. This is the balance sheet figure. This is the balance sheet figure. In that, at the time of acquisition, it was 30,000. Oh, sorry. So this is up to 1st April 20x1. So this is 30,000. And after 1st April 20x1, it is 10,000 everyone. So this is entirely pre in this April, May, June, July. 4 months is free. So 10,000 into 4 by 12. So I thought it was 31st July. April, May, June, only 3 months. So into 3 by 12, 2,500. And 10,000 into in a year, there are 12 months. So 12 minus 3 is 9 months. So 7,500. This is post and this is everyone. Now free acquisition total I will do H limited and minority. It is 80%. So 24,000, 6,000. This H limited minority 2,500. How much? 1,500. Everyone. Now, bhaiya, minority interest, it is 20%. PNL is 40,000. 40,000 into 20%. 8,000, add and check. 6,000 plus 500 plus 1,500. So we are not required to give the split. We are not required, but still we are giving because anyways holding company we have to do. Okay. So now I think we are ready with the working notes. So now a pre-acquisition profit year 24,000 and year 2,000, 26,000. So total 1,06,000. We have paid extra or we have paid less? How much extra? 20,000. That is perfect. This is goodwill. So capital reserve will not come. Capital reserve will not come. PNL. PNL of PNL of holding company. It is. So PNL for here also I have to put H limited and S limited. How much for H limited and S limited post acquisition? 6,000. Total 56,000. Then 1 second. So we have done share capital, we have done PNL. Then minority interest. Note number 3, minority interest, share capital here. 1 lakh into 20%, 20,000. Now PNL, we have two options to show separately or not to show. It is up to you based on time. If you have time, show pre and post separately. If you don't have, for me, more than time, space is the constraint. Screen is not enough. So PNL directly 1 lakh is the amount. 40,000 into 20%. So 28,000 minority interest. Then trade payables. So trade payables 1,60,000. 1,60,000. Then PP 1,130,000. Same, no? 1,30,000. 2,30,000. Then investment will come. Why? Already adjusted in cost of capital, cost of control cost. So intangible asset. No. So note number 6. So bhaiya, can I give cost of investment in note number 6? Definitely no. I was stressing time and again, note and working notice. Didn't I mention in the previous problem? So now this will be your note number 7. Now note number 6. Under that, goodwill. Here I'll give reference to working note 1. 20,000, 20,000. So goodwill 20,000. And finally, current assets 74 and 70. 144. Balance sheet tally, magic. Everyone, come on, copy quickly. Are you all able to follow? Previous problem, this problem, except reserve, no other adjustment. All the other things are same, same, same. फर्स्ट ये तो लिख लो, एनीवेज लास्ट में आया. क्या भैया मुख्य मुख्य प्रॉब्लम्स को अच्छा प्रॉब्लम नहीं है? रुको जरा, सबर करो. Illustration 11. Reserves working. Okay, so now let's move to the. वो क्या बोले? Last question before we go for lunch. आराम से लिखो. आप अगर विसित को देते ना ये पूरा प्रॉब्लम 1 मिनट में लिख के दे देता हूँ. Total 7 illustrations. If we complete, the chapter is over. Out of that, we have completed 2, 5 more left. Today, as soon as we complete, I'll leave you guys. 4th to 4, 6th to 6.
3 o'clock.
क्या 3 o'clock?
एक समय का.
वाणी जल्दी लिखो. क्या? Yes. Okay, let's move on. Mm. Let's start. The last problem for this session. From the balance sheet and information given below, prepare consolidated balance sheet of Virat Limited and Anushka Limited as at 31st March. Virat Limited holds 80% of the equity shares in Anushka Limited. Definitely some male person has drafted the problem. Otherwise, Anushka Limited would have held 80% in Virat Limited. Since it's Anushka Limited Incorporation, this sentence has become very, very, very important. Why? From day one, he was holding 80%. No pre-acquisition. No pre-acquisition reserve. Wow. Simple problem here. Share capital 6 lakh, 4 lakh, reserves and surplus. They have given some notes. Long-term borrowing, trade payables, PP, non-current investment, inventory, trade receivable, cash. All are useful items only. Notes to account, share capital, one company 60, the other company 40. Reserves and surplus, and non-current investment, shares in Anushka Limited. That's all. No adjustment bhaiya in this problem. 2 minutes problem will get over. सच्ची में भरोसा ही नहीं है. कुछ तो होगा. क्या होगा? पूरा प्रॉब्लम बता दिया. So now, let's begin everyone. No homework. नहीं है आज से homework. I'll tell you. So illustration 12, consolidated balance sheet of Virat Limited as at 31st March 20x1. So particulars, note number, amount. So shareholders fund, share capital only for holding company, which is Virat Limited. 60,000 shares of 10 each, 6 lakhs. Reserves and surplus, note number 2. So for that we have to calculate cost of control. See, write summary notes. Everyone go to your summary notes. 4 point. 4.5. Investment in subsidiary in holding company books. Investment in subsidiary in holding company books will get knocked off against share capital in subsidiary company books. Will get knocked off against, my English is this much only maximum. Adjust with it. Share capital in subsidiary books. Full stop. In other words, other investment in holding company books will appear in balance sheet. Other investment in holding company books will appear in balance sheet. So what exactly I am trying to tell, let me explain. Holding company, they have invested in subsidiary.
Yes.
That will come in investment. It will not come in the balance sheet. But they will have other investment, shares, property, etc. That will come in balance sheet. So every time non-current investment, they have given 320, and entire non-current investment in shares in Anushka Limited, 3,20,000. Now, holding company share at the date of acquisition, it is 4 lakh into 80, 3,20,000. Pre-acquisition profit not there. No goodwill, no capital reserve. और इससे simple और क्या हो सकता है problem? Eh? 80% is only held by holding company. Minority interest will be. कंसोलिडेशन फर्स्ट क्लास से थे ना, ये रक्षिता नहीं थे, ये बोल सकते हैं नो गुडविल, नो कैपिटल रिजर्व, नो माइनॉरिटी. खत्म कंसोलिडेशन. So reserves and surplus, general reserve. Now general reserve, should I take H Limited fully? Should I take S Limited fully? Who said yes? Manga Madhya. S Limited, only 80% will come. 20% will go to minority interest. S Limited, it is 1 lakh. हाँ ठीक है. Virat Limited, Anushka Limited. So 1 lakh into 80%. 1,80,000. Now minority interest, share capital 4 lakh into and PNL. General reserve, PNL all same. Minority interest 1 lakh. Then trade payables. Oh, before that we have non-current liabilities. Non-current liabilities under that long-term borrowings. Note number 4. So 1 second. Goodwill / capital reserve is non. And then note number 4. Virat Limited and Anushka Limited. So 2 lakh and 1 lakh. So 3 lakh is long-term borrowings. Note number 5, trade payables 1 lakh and 1 lakh. So, what a discovery. Intangible asset will, liability side over. Everyone, yes. Now, non-current assets, PP, 4 lakh and 3 lakh. So this will be note number 6. Amounts 4 lakh, 3 lakh, 7 lakhs. Then intangible assets, it's not that, it's not that. Current assets, oh my God. So now current asset, ah. So in current asset, inventory, trade receivable, cash and cash equivalent. I think we can do one more problem before lunch. Cash and cash equivalent. So seven. Note number 7 is inventory. Inventory. Amount is 1 lakh 60 and 2 lakhs. 3 lakh 60,000. Then trade receivable, cash and cash equivalent. सब उल्टा उल्टा हो रहा है. So yes, trade receivable 80 and 140. And finally, cash and cash equivalent 40 and 60.
What number 9?
Cash and cash equivalent, it is 1 lakh. So total is, so I feel the previous problem was more challenging than this one. Here, what they have done, they have just increased the, you see the size of the question one, and it is going to 1.5 pages. But do you think solution anything great we have learned? No. Correct. So we'll do one more problem before we go for lunch. One, copy quickly, copy quickly. Uh-huh. I'll do one very small problem. Very small problem बोला मैं. इससे 1/4 भी नहीं है, हुआ तो आप बीच में चले जाना बस. इसका 1/4 भी हुआ तो निकल जाना बीच में. अब पहले लिखना तो चालू करो. लाइफ में है ना, प्रेशर हैंडल करना सीखना है. आरवी लिखो। Done. Done? Risit is telling everyone write fast. नहीं, सब लिखने के बाद आप जाओगे नेक्स्ट प्रॉब्लम होने के बाद. Okay, everyone. Now let's move on. Illustration number 13. It is a full-fledged consolidation problem. We will start post lunch. Now I'll do illustration number 14. You see illustration 13 solution 1, 2 page working note, 1.5 page notes to accounts, 1 page balance sheet. That's all. 3 pages solution. Okay, so now we will discuss this. We will discuss this, which is intra-group transaction. Now, it is possible that holding has sold goods to purchasers, purchase as subsidiary has sold goods to holding. So these are called intra-group transaction. This transaction happens within the group, everyone. Now, let's say I am holding Moksha is subsidiary and I am selling goods to Moksha. Now, in my books, I'll show sales. In Moksha's book, I'll show purchase. In standalone balance sheet, it is correct. But when we combine both the balance sheet, can we record the transaction? Because the transaction is happening within the same group. So what we will do, we will reduce purchases, we will reduce sales. Everyone. So whether I sell goods to Moksha or Moksha sells goods to me, or other words, holding sell goods to subsidiary or subsidiary sell goods to holding, you will subtract it from sales and purchase. Everyone. Yes. Apart from that, I sold goods to Moksha. I would have definitely charged profit. And it is there in Moksha's balance sheet. Moksha's balance sheet that is there. Now when we are adding both, I would have charged profit. That profit we have to reduce. Now here you need to understand there are two type of transaction. One is upstream, one is downstream. Upstream means, up means like this, everyone. So subsidiary is selling goods to holding. Upstream, it up means it is going in upward direction. So subsidiary is selling goods to holding. Downstream means holding is selling goods to subsidiary. Everyone. Now, if it is upstream, who is selling to whom? So, who has unrealized profit in their books? Or who has made the profit? Subsidiary has made the profit, and that profit, who is enjoying? Holding and minority interest, everyone. Holding and minority interest. Now, downstream, who is selling to whom? Who has made profit? It is only enjoyed by holding. So now, point number 4.6. Right, intra-group transaction. Upstream, downstream. We are not writing this fully because we'll write the journal entry. We are not writing this. We'll write the journal entry. Intra-group transaction, upstream, downstream. Upstream, downstream, everyone. Upstream, write the entry. So holding is enjoying profit. Holding's profit should come down. So P&L account debit, minority interest account debit. 2, you know the credit. Stock, very good. Because stock has unrealized profit that you are reducing. So holding P&L reducing we debit, minority decreasing we debit, Minority interest is also liability. That also we are debiting, and stock is also reducing, so we are crediting. Downstream journal entry,
Yeah.
P&L to stock. That's all. P&L to stock. Everyone. Simple. Upstream and downstream, that you will do wrong in exam. This transaction looks very simple, right? But whatever it is, stock should be credited. If it is upstream, holding and minority interest P&L. If it is downstream, only P&L. Simple, simple. Now, 1 minute illustration. Illustration 14. A Limited holds 80% of equity in voting power in B. A Limited sells inventory. Upstream, downstream? Downstream, because holding is selling to subsidiary. 180 lakhs to B Limited at a price of 200. So 180 lakhs is selling for 200. Profit. Entire stock remain unsold. Entire stock remain unsold. Journal entry. P&L to stock amount 20 lakhs. If they say 30%, 40% in stock, then in this 20 lakh, you will take 30%, 40%. 20 lakh is for the total inventory. If 30% is in stock, we will reverse only 30%. A Limited holds 75% of equity and voting power in B. A Limited purchases inventory. Upstream. Goods costing 150 lakh from B Limited at the price of profit. The entire inventory remain unsold. Janar. So 50 lakh we have to reduce 37.5. Everyone, but you see how they have given the answer. First, I'll show this later. As per paragraph unrealized losses, they are telling unrealized losses should be eliminated. Then something, 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 and final conclusion. Uh, Unrealized profit would be eliminated for the financial by reducing the consolidated profit and reducing the closing inventory. This only we wrote in journal. And second part, the consolidated profit entire, one second, for the unrealized profit of 50 lakh would be eliminated by reducing value of closing inventory by 50, and profit will be reduced by 37.5 and minority would be reduced by 12.5. Same thing we have written in journal. So write quickly, downstream transaction, write the journal, write upstream, write the journal. फटाफट लिख के जाओ, कोई पहले गया तो not my responsibility. So it's 12:45. I'm leaving you for break. So we will start by 1:45. I'm giving you break by 12:45. So we will start by 1:45. Three big illustrations we need to complete. If we complete by 4, then 4 o'clock. I'll leave you. I'll leave you as soon as we complete. This and MCQs. Then 5 o'clock.